Okay, we just got the Case-Shiller data updated through December 2021. Let's look at some highlights. Phoenix is still the hottest market for the last 12 months. The real inflation adjusted price is up 22%. If we look at like the last 12 months versus the previous 12 months, you can see that Washington, D.C. hasn't increased much more the last 12 months than the previous 12 months. So some markets are losing momentum. This shows the unadjusted, not inflation adjusted price increase over the previous 12 months. So you can look at the different markets if you want to look at, like, for example, on New York, you just click on it here and can pick out New York, etc. An interesting feature is looking at Phoenix. You can see that Phoenix has been, since when is this? Since middle of 2019, Phoenix has been the leader in appreciation and still is by far. Before that, it was Las Vegas. Before that, it was Seattle as far as 12-month appreciation. Okay, and this is inflation adjusted, and I'm using 1990 as the baseline as 100. And the dark blue line here is the USA. Let's look at Phoenix, where I'm at. And at least in Phoenix, let's only look at Phoenix. The value here in December was matches the peak month back during the the great real estate bubble. One thing that's different though is that this is real inflation adjusted prices, but between then and now, real average income inflation adjusted has also increased, which makes it all these prices are incredibly high. They're not quite as bad as they were back then because income is higher as well. This shows you what's happened with the interest rates increasing so quickly. This is how much money you can borrow just with $1,000 of monthly principal and interest mortgage payments. That's obviously tanking, which makes homes more expensive per $1,000 of monthly P&I mortgage payments. And here I adjust the prices for inflation, but I also adjust them for interest rates and how much money was put in a down payment versus how much money was the monthly mortgage payment was principal and interest. And you can see we're at 109 for the US as a whole, which is not as bad as 2005, but obviously it's hugely higher than it has been for years. Yeah, look at that. And it actually is higher now than during, or about the same as during the savings and loan real estate peak. Looking at real per capita personal income, this is for Phoenix, and you see at the peak it was 128, and now, well, at least in 2020 it was 136. So it's not really that much more. So that kind of gets rid of what I said earlier. The the real the real home price is about what it was at the peak, but real Phoenix per capita personal income is just a little bit above than what it was back at the peak. That's not good. Great. If you find this useful, please subscribe. Take care.